All right, we're going to move on now and talk about the special depreciation provisions for personal property, and that's primarily the Section 179 expensing. This provision allows for immediate cost recovery in addition to depreciation. It allows the taxpayer to immediately deduct up to $1 million of tangible personal property placed into service during 2018. And it's $1 million in 2018. That's up from 2017 amounts, and it changes annually. All right, so a couple of things have to happen for this to work. First, we have to be talking about tangible personal property only. It applies whether the property is purchased new or used. It just has to be new to the taxpayer. And it's allowed only in the first year the property is placed into service. Again, it's $1 million of immediate expensing for personal property in 18. And the 179 expense reduces the depreciable basis and is applied before determining the appropriate convention. So we're talking about personal property. We're deciding between half year and mid-quarter, and we do this Section 179 depreciation deduction before determining the convention. Number 6, the taxpayer can choose which assets to expense immediately under 179. And the general rule is that we want to allocate 179 to the asset with the lowest first year cost recovery percentage. All right, there are limits to 179 deduction expenses. First, the asset must be purchased from an unrelated party. We're trying to prevent income shifting from one taxpayer to another related taxpayer, so it has to be an unrelated party. The maximum amount of the 179 expense is reduced dollar for dollar for the amount of tangible personal property placed into service in 18 that exceeds 2.5 million. So the 1 million is allowed to be expensed immediately, but you lose that 1 million dollar for dollar for the amount of tangible personal property placed into service in 18 that exceeds 2.5 million. Number 3. The deductible 179 expense cannot exceed net income, including depreciation but not 179 expense, from the conduct of trade or business. So if the limit applies, the excess is carried over and is deductible in a subsequent year, still subject to the income limitation. Number 4, $1 million max applies to all entities over all purchases of tangible personal property. This only applies if the company owns multiple entities. All right, so we're going to go through a couple of examples here. First, we have Gold Rush Inc. purchased and placed into service an asset with a 5-year life, and it was worth $2,835,000 in 18. What is the maximum 179 expense for Gold Rush in 18? So remember, it's $1 million possible max 179 deduction, and it's lost for taxpayers who place into service more than 2.5 million in tangible personal property during the year. So this taxpayer placed into service 2.835 million, so they went over the threshold of 2.5 million by $335,000. So I'm going to say over allowed amount. So they lose, and they can deduct 1 million minus the 335 that they lose, or 665,000 as a Section 179 deduction. Using the same facts as above, assume Gold Rush has taxable income after regular depreciation of $275,000. What is the maximum Section 179 expense for Gold Rush in 18? What happens to the excess, if any? So the maximum is $275 in this case. So only the $275 allowed because it's limited to the taxable income. The excess of $390,000 is carried forward indefinitely. RST Inc. purchased 3 assets in 2018. The company placed office furniture, which is 7-year property, into service in May. I'm going to switch our color so we can keep track of all this. Computing equipment, which is 5-year property, was placed into service in August. And then we have machinery, which is 7-year property, placed into service in December. The question is, what is the maximum cost recovery deduction for these assets, ignoring bonus depreciation in 18? We're assuming that the company has sufficient income to deduct the full amount allowed under 179. All right, so this is a complex problem. We have multiple assets, and this is the process of calculating the cost recovery deduction when choosing among assets, okay? So first, we determine the convention before applying 179 expense. So this isn't the convention that's necessarily actually going to be used, because you'll see in number 3, we recalculate the convention. But right now, we calculate the convention as we stand right now. So we have office furniture that was placed into service in May, computing equipment that was placed into service in August, and machinery placed into service in December. So we need to figure out how much was placed into service during the third quarter. All right, so we have $685,000 divided by a total of 1.7 million in total assets, which is 40.3%. And I'm just going to say it was placed in the fourth quarter. Okay, so this is number 1. That means the mid-quarter convention applies. I need to know that because I want to go look at, for the furniture, for the computing equipment, and then for the machinery, what is the applicable percentage? Okay, what is the applicable percentage? So remember, the office furniture is 7-year property placed in May. I'm going to go back. I am using the mid-quarter convention, so we're going to have to switch colors since I colored on this before. Mid-quarter convention, the furniture was placed in May, and if we remember correctly, the furniture is 7-year property. So I'm looking over here in the second quarter, and I would use 17.85%. So I come back over here and I keep in mind 17.85% is what I would use for the furniture. Under mid-quarter, we're just ignoring 179 for a second. The computing equipment is 5-year property and it was placed in August. So I come over here, 5-year property placed in August. So I'm going to use 15% for that computing equipment. Just going to make a note, 15% is what I would use there. And then the machinery, which is 7-year property placed in the fourth quarter. I come over here, fourth quarter, 7-year property, I'm using 3.57%. Okay, so I can make these notes and say, all right, given the fact that the machinery is only going to get 3.57%, I would allocate all of my 179 to the machinery. Earlier in the notes when it says to apply it to the lowest percentage, let me find that. Yeah, we want to apply the 179 expense to the asset with the lowest first year cost recovery percentage. That's what we're talking about. So we figure out we would use mid-quarter. This is what the percentages would be. Now I know I'm going to apply all of my 179 expense first to the machinery. All right, so then number 2, we apply the allowed 179 expense to the asset with the lowest first year cost recovery percentage. So we have the machine. It cost $685,000. We don't lose any of our 179 deduction due to net income being too high, so I'm going to apply 179 of 685 to the machine. So now the machine has 0 depreciable basis. It's fully depreciated. Number 3 then says you recalculate the convention after applying the 179 expense. So now I'm going to recalculate what convention am I going to use now. The machine goes away. So I have 0 placed into service in the fourth quarter. Remember that the office furniture is placed in May, the computing equipment is placed in August. So I have 0 of the remaining 1,015,000 placed into service that was placed in the fourth quarter. So now that tells me I'm going to use the half year convention. I don't have that 40% a rule applying, so I'm going to use the half year convention. Now I'm saying, okay, what do I have left? I have the furniture and the computers. I have to go look at which one has a lower percentage to see how much to apply the remaining million of my 179 deduction. All right, so I'm going to look at the half convention table now for my furniture, which is 7-year property, and my computing equipment, which is 5-year property. So I come over here, I'm looking at this half-year convention. Remember that the furniture is 7-year property, so I'm looking at 14.29%, and the computing equipment is 5-year property, so I'm looking at 20%. Okay, so furniture 14.29. I'll write that down before I forget. And computing equipment 20%. So by following the same rules, I want to apply any of the allowed 179 that's left next to the furniture since it has the smaller percentage. So I have the furniture cost, which was $530,000. I apply the remaining 179 left, which is 315, since I already used 685 for the machine, and that leaves a depreciable basis of 215,000, and that's the depreciable basis for the furniture. Now I calculate normal depreciation. There's no more 179 deduction to use. So number 4, we applied any remaining 179. We did that. We keep doing 3 and 4 as much as you can until the 179 is gone. And now for number 6, after allocating all 179, recalculate the convention. We already know it's going to be half year, and calculate depreciation. All right, so then for number 6, I have the furniture, which now has a depreciable basis of 215,000, and I multiply that by the 14.29%, which is half year convention for a piece of property that is 7-year property, and I get depreciation in year 1 of $30,723.50. I do that for the computing equipment. Computing equipment cost me $485,000. I didn't take any 179 on it, and I know that the percentage for half year convention for that's 20%. Let me make that a little clearer. 20%. So that means my depreciation for the computing equipment is $97,000 in year 1. The max deduction for this company is the million of 179 plus the 30,000 we just calculated on the furniture, 723.50, plus the 97,000 on the computing equipment, which gives us a total of 1,127,723.50. Okay, so I can highlight for us then all of the amounts that we're deducting. Okay, the 685 plus the 315 gives us the million of 179. We were able to use it all. And then we calculate normal depreciation in step 6 with the remaining amount. All right, Argonne Inc. reports taxable income of $510,000 for 2018 before deducting any 179 expense or depreciation. The company placed 7-year machinery worth $1.685 million into service in September. What's the maximum cost recovery deduction the company can claim for 18? And do they have any expense to carry forward? If so, how much? Because there's only one asset, Argonne would apply the full 179 expense to the machinery. So my machinery cost 1.685 million. I have an allowed 1 million in 179 expense. That leaves a depreciable basis of 685 for the machine. And then I can calculate normal depreciation once I figured out the convention. Because it was placed in September, I know that I'm going to use the half-year convention. All right, so I have 7-year property. I am using the half-year convention. I'm going to multiply the 685 by 14.29%. And that gives me current year depreciation, $97,886.50. The deductible section 179 expense, $510,000 minus $97,886.50 gives us $412,113.50. All right, so remember their taxable income is $510,000 and their 179 expense deduction is limited to taxable income minus depreciation other than 179. So we have to say taxable income minus the depreciation other than 179 gives us this new number we're going to say is sort of like a testing taxable income again. This is the max 179 deduction that would be allowed. And then the carry forward would be the remaining million, what's left of the million, I should say. So the max deduction is $412,113.50 plus $97,886.50. Or $510,000. The section 179 carry forward is $1 million. Sorry, my handwriting's getting sloppy here. 1 million minus the amount of the 179 that you took now. Or the carry forward is $587,886.50. Okay, so again, you subtract the 179 as if you could take all of it. Calculate normal depreciation. Then you need to take taxable income minus the normal depreciation, and that gives you the $412,113, which is the limit of the 179 that you can take. So the maximum depreciation deduction is over here at 510, and the 179 carry forward is 587,886. We are going to skip bonus depreciation, listed property, and luxury automobiles.